Well, let's take you to a story now that has a lot to do with some of the comments you heard earlier coming from Public Enterprises Minister Pravin Gordhan before the Commission today. The International Monetary Fund says initial optimism in the South African economy is fading. It says economic recovery plans face serious constraints with the growing debt of state-owned enterprises. For more on this, we're now joined by ENCA's U.S. correspondent Simon Marks, live from Washington, D.C. Now, Simon, as much as the IMF acknowledges that this is as a direct result of global trade tensions, surely, growing debt of state firms, which Pravin Gordhan spoke about today at the state capture inquiry, as well as capital outflows, can't be good for our economy.
No, absolutely, Vuyo. It does talk about the global environment in which the South African economy is finding its feet, but it says a lot more than that. This is the two-page concluding statement that results from a recent staff visit to South Africa by the International Monetary Fund, and it warns very clearly that this is a critical time for the South African economy. It calls for the South African government to redouble its efforts to implement economic reform. It contains warnings about the risks of deepening unemployment levels in South Africa, and it also talks about the potential negative effects about the debate on land reform. So let me just run through some of the major points that the IMF is making here, and this report's been published here within the last hour. It does welcome what it says the government's attempts at stepped-up efforts to improve governance and enhance dialogue with the private sector, but it says reform implementation is facing headwinds in South Africa. Some of the initial optimism has dissipated, the report writes, as growth remains stuck in low gear and reform implementation has faced constraints. It says some of the negative effects of the changing external environment are already being felt in South Africa, despite the country's economic resilience. And the IMF is warning that that is an indication that unless government changes its approach and deepens its commitment to reform implementation, things could get much tougher in South Africa in the months ahead. It says growth is continuing to lag, economic vulnerabilities are rising. It is a critical time now to implement stalled reforms to restore confidence, attract investment, support growth, and rebuild buffers to deal with a challenging international environment. The IMF is calling for labour market practices to be revisited to unlock job creation and reduce the cost of doing business. Then comes the warning over land reform. It calls for clarification to take place on recent policy proposals. Land reform, it says, should focus on enhancing agricultural productivity and at the same time the potential negative effects of the land reform debate should be mitigated, particularly those related to the security of property rights. It says that proposals to nationalise the South African Reserve Bank should be reconsidered, arguing they represent an unnecessary distraction with a potentially sizable fiscal cost. The authorities, the report goes on, need to continue implementing sound macroeconomic policies to complement reform efforts, and it says that stepping up reform implementation will help reduce policy uncertainty. If that doesn't happen, the IMF warns, growth could be severely compromised over the medium term with attendant further increases in unemployment. So this is a wide-ranging document by the IMF staff that recently visited South Africa to make an assessment of the situation on the ground there, and they are absolutely making clear their concerns about the outlook in a variety of different areas for the South African economy in the months ahead.
So a great deal of focus on labor market and land reform in that report, Simon. But I want us to go back to an issue that Pravin Gordhan raised at the Commission today, which I alluded to in the intro to this story. I mean, Pravin Gordhan was saying, there's a 350 billion rand guarantee to Eskom, and Eskom has already borrowed about 240 billion of that. Does the report say what it is that the state-owned companies should be looking into or should be doing to avoid sliding further, into crisis mode?
Absolutely, Vuyo. So there is specific reference in this report to Eskom. Public debt and contingent liabilities are expected to continue rising in line with expenditure trends on wages and the interest bill and the fragile financial positions of several SOEs, particularly Eskom, write the IMF staff who compiled this report. Weak growth and deteriorating public finances could trigger additional capital outflows, potentially creating adverse spillovers through the interconnected financial system. Space for continuing monetary policy support, they argue, is narrowing as inflation expectations get closer to the upper end of the 3 to 6% target band and US monetary policy tightens. And again, rising unemployment, they warn of, and inequalities could accelerate calls for populist initiatives on the political stage. So they're arguing there is a direct connection between the way in which these state-owned enterprises and their futures are handled and the feeding in to the rise of populist sentiment on the political stage that the South African government and the ANC is now risking.
And one would imagine they are going to monitor South Africa even more closely beyond this point.
Yes, I mean, this is part of an ongoing monitoring of the South African economy by the IMF. I think it's important to note, Vuyo, that this report does contain a bit of a public health warning at the start. It says the views expressed in this statement are those of the IMF staff and do not necessarily represent the views of the IMF's executive board. This mission will not result in a board discussion. So there's no sense in which this report now triggers additional action at a board level at the IMF with regard to South Africa. And critics of the International Monetary Fund will say, well, of course the International Monetary Fund would be warning of the dangers and the difficulties, for example, of the conversation about land reform. The International Monetary Fund never operates in an entirely politically neutral sense. It has numerous detractors who say that the IMF always pushes global economies to adopt free market solutions to the problems they face. But nonetheless, this is a wide-ranging document, and it does point to what IMF economists are suggesting are several worrying warning signs now out there about the future for the South African economy.
Simon Marks, that's where we're going to leave it for now. Thanks very much for joining us at this hour. A story which, as Simon was saying, broke about an hour ago. A report from officials of the IMF, which the IMF has been at pains to say it doesn't necessarily reflect the position of the fund, but with very strong, stern warnings around labor market and land reforms, as well as the exposure of our state-owned enterprises.